G'day everyone and welcome back to the channel. It's Friday the 27th of March 2026 and you're watching your go-to Aussie market wrap. If you're new here, hit that subscribe button and the bell so you never miss these daily updates. Today we're diving deep into how the ASX performed, what moved the big stocks, what's happening with commodities, the Aussie dollar, and what it all means heading into the weekend. Let's jump straight in because there was plenty of action today. The S&P ASX 200 ended the session at around 8,516.30, slipping about 0.11% or roughly 940 points on the day. It wasn't a bloodbath by any means, but it did feel a bit heavy after Wall Street took a decent hit overnight on those ongoing Middle East tensions and spiking oil prices. We opened lower, dipped as far as the mid-8,450s early on, but buyers stepped in later and we managed to claw back some ground to finish not too far from flat. For the week overall, the ASX 200 is actually a modest 1.40%. That might sound neutral, but when you look at how sharply we sold off on Monday, finishing the week almost flat is a real sign of resilience. Now let's talk sectors, because this is where the real story played out today. Energy was the standout performer once again, climbing about 0.88%. With oil prices jumping on geopolitical worries and Trump's latest comments around Iran, our energy names got a solid tailwind. Coal stocks and oil-related plays were in the mix, and that sector really carried a lot of the positive momentum. On the flip side, technology took another beating, with the Information Technology Index falling nearly 1.53%. Healthcare was also softer, and a few other defensive sectors were mixed. Resources overall were a bit patchy, with some strength in energy minerals but pressure elsewhere. It was very much a tale of two halves. Energy loving the global uncertainty, while growth sectors like tech struggled with the risk-off mood. Let's get into the individual stock movers, because there were some big swings that retail traders would have loved or hated, depending on which side they were on. On the winners list, we saw some nice gains in a few standout names. Treasury Wine Estates had a strong session, jumping over 7% as investors rotated into certain consumer names. Helix Pharmaceuticals climbed around 5 to 6%, continuing its recent momentum in the biotech space. Whitehaven Coal and New Hope were riding that energy wave higher, delivering solid gains for anyone positioned in the resources sector. There were also pockets of strength in a few other materials and industrials names that benefited from the commodity moves. On the losing side, it was tougher for some of the high-growth and tech-exposed stocks. DroneShield got hit hard again, dropping over 10% in a volatile session. That one has been swinging wildly lately. A couple of copper-related plays felt the pinch as base metal prices eased a little, and some healthcare and tech names rounded out the bottom of the list. As always, these big daily moves remind us how quickly sentiment can shift on individual stocks, especially when broader market nerves are in play. Zooming out to the bigger picture on commodities, oil had a wild ride, surging as much as 4% at one stage on those Iran-related headlines before giving back some of those gains. It still closed meaningfully higher, which is why our energy sector shone. Iron ore was relatively steady, trading around the US $106 per ton mark after recent cyclone concerns eased and no major port disruptions hit supply. Gold pulled back a touch after its strong recent run as some investors took profits amid the mixed global risk sentiment. Copper was a little softer too, which weighed on a few of the mining names. The Aussie dollar was trading a bit weaker today, sitting around 68.9 US cents. That softer tone makes sense with the stronger US dollar and those global risk-off flows, but it does provide a bit of a buffer for our export-heavy companies. So what does all this mean as we head into the weekend? The market showed some real backbone today. Despite the negative lead from the US and ongoing geopolitical headlines, we didn't collapse. Trump extending the deadline on Iran talks to early April gave a little breathing room, but nobody is pretending the tensions have disappeared. Looking ahead to next week, eyes will be firmly on any further developments out of the Middle East, oil price direction, and how our big miners and banks report or react to the macro backdrop. The RBA and global central bank chatter will also stay in focus, especially with inflation risks potentially creeping back if energy prices stay elevated. That's your full Aussie market wrap for Friday, 27th March 2026. What did you think of today's session? Are you bullish on energy stocks while oil is running hot, or are you sitting on the sidelines waiting for more clarity on geopolitics? Drop your thoughts in the comments below. I genuinely read as many as I can and love hearing your takes. If you enjoyed this longer, more detailed wrap, make sure to smash that like button, subscribe if you haven't already, and turn on notifications so you catch Monday's update bright and early. Have an awesome weekend, trade smart, look after yourselves, and I'll see you back here next week for the next Aussie Market Wrap. Cheers, legends. Go the ASX.
Disclaimer. The information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.